Good morning traders and welcome to the daily call. Today Wednesday the 5th of April. Before we do get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Okay, so let us kick off and have a look at what's happened in yesterday's session. It was quite a busy one for the Aussie dollar. We had the trade balance come in strong, 20% increase from the previous month. As the RBA also decided to leave rates unchanged, and the main message from Governor Lowe, which was delivered on monetary policy, was that conditions in the global economy have improved over recent months. Labour markets have tightened in many countries. In China, the growth is being supported by higher spending on infrastructure and property construction, but the composition of growth and the rapid increase in borrowing means that the medium-term risks to the Chinese growth remain. So it seems that pretty much all the investors were really listening to, they're hooked onto the message that China still remains a risk, a medium-term risk, and consequently the Aussie dollar had a down day. So it wasn't too dramatic. I think we lost around about 60 odd pips for the day, which helps us because I think we've got a short position on the Aussie dollar, which we got within 5 pips of my second target. I'll analyze that after this session and I'll tweet out if I want to close out that trade or not. Okay, let's move along. In the UK, we had construction PMI. It was at forecast, but the headlines read, weaker housing activity growth weighs on the UK construction sector. I guess when we tie this in with a somewhat of a recovery day yesterday for the US dollar, that basically meant that the cable had another down day as our resistance level seems to be holding, and we triggered into another trading challenge trade. So there you have it. We can see that we had picked out one of these charts yesterday, and we've broken the inside candle, and the trade has begun. So let's see what unfolds on that one. In Canada, following 3 consecutive monthly surpluses, well, yesterday they posted a $1 billion deficit in the trade balance. Consequently, we saw the US CAD shoot up a little bit. So there was a little bit of negative data there for the Canadian dollar. In Europe, what do we have? Mr. Draghi's speech. Well, yesterday the euro had a relatively tight trading day. The main focus of Mr. Draghi's speech was really the launch of the new 50 euro banknote. So all in all, not much action on the euro. I think we had a tight trading range of around about 40 odd pips. That was quite a slow session for the euro yesterday. Okay, so it's now time for the chart of the day. Let's have a look. What do we have today? It is a Swiss yen daily chart. Now you can see from my chart here, I found a really nice channel. We have basically 2 touches up top. We have the 1 and 2. And we have got the 2 touches that have already occurred down the bottom, so we are now at the 3rd touch. This is the first tradable opportunity, if you're not an aggressive trader, that is. And so all we need to wait for right now is this current candle has not completed at the time of me making this recording, so we need to wait for the current candle to finish to see if it remains an inside candle. And if it does, then we're set, we're ready to go, and we'll see if we can trade this back up to the other side of the channel. So there you have it. Our chart of the day is the Swiss yen on a daily chart. Okay, so what's happening in the session that is about to unfold? Well, we have, first of all, at 6:30 this evening, of course, this is my local time, which is Sydney time, or otherwise known as Australian Eastern Standard Time. We have services PMI from the UK. In the US, we have the non-farm employment change numbers and the manufacturing numbers at midnight from the US, but also crude oil inventories at 12:30. This one's more for Canadian CAD traders. And the big one, okay, 4 a.m. is the FOMC meeting minutes. So we're looking specifically to see if the Fed gives us any indication as to what their plans are regarding interest rate cycles and raising the rates or delaying anything at all. So anything that's hawkish is going to be pro US dollar. Of course, we still have non-farm payrolls coming out Friday. So, but this is the second most important piece of news that's coming out this week. That's pretty much all I have for you today. As always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, I hope you all have a fantastic trading day. I will see you tomorrow for the daily call, and that's bye for now.